In the event that the accountants have compiled or reviewed the prior period statements, but prepared the current period statements, so this year's a preparation, last year's something more, either a compilation or a review. It says the accountant must reissue the report for the prior period, true or false?
I would say false.
False, because this year's a preparation which doesn't get a report.
Okay.
Right? The current year's a preparation which doesn't involve a report. So there's no report necessary involved with a preparation, even if last year was compiled or reviewed. Remember, a preparation, what is a preparation? That's where the accountant comes in and logs into the QuickBooks cloud-based client software package because the client asked you to, because the client says they need a little financial statement. They're a mom and pop business. They need a financial statement for the bank. The bank wants to renew a loan, or the landlord wants to see financial statements in order to renew the lease, or somebody wants to see a financial statement and the client doesn't want to screw it up, the financial statement. So they ask the accountant to just please send us a financial statement and send one to the bank or the landlord or whoever's requesting it. In the past, a few years ago, we would have had to do a compilation, which means you had to have a report, your signature on the report, and then you'd have to charge the client because you had to do a report and a signature. And the client's like, I don't want all that. I just want you to send a copy of the financial statements to my landlord. I don't need anything else. Now it's so much easier, right? Because you can just prepare it, launch it off into cyberspace, and there for anybody who wants to see it. Without a report, you send the financial statements, one or more financial statements of the client, even to a third party. And the key is without a report, because this is a preparation engagement. So it says current year is a preparation, but they wanted a comparative, and last year was something else, like a compilation or a review. Do you have to review or do you have to reissue last year's report? Because a compilation or the review from last year would have a report, where this year wouldn't have a report because it's a preparation. Do you have to send along last year's report with this year's preparation? No. In fact, it would just be confusing if you did, because there's no report this year.
Right. When you do preparation.
That's a good question. When you do a preparation, does it look like the client did the financial statements? It could. You could do it that way because your name is not on it anywhere.
Yeah.
Your name is not on the financial statements as the accountant in a preparation. There's no report required. So no third party is going to even know that you did it. So if you want to make it like it looks like the client did it, that's fine. That's probably what you would do, because your name, you certainly don't want your name associated, because otherwise you'd be doing a compilation or you'd be doing a review. So there's no report here. So each page of the financial statements in a preparation has to be indicated, has to be clearly marked that this is a preparation and that there's no report required and that kind of thing. And that's very important in a preparation. Whereas you do need one thing, very importantly, you need an engagement letter to do a preparation.
Right. So it makes it clear exactly what you're doing.
Right. Makes it clear with an engagement letter. But you're going to have make sure each page of the financial statement says no assurance provided, because there is no assurance provided. And you can't reference any report like you would in a compilation. If this were a compilation, you'd have each page of the financial statements would have a footer that said something like see accountant's compilation report. But you wouldn't do that in a preparation since there's no report to reference. So your footer on the financial statements will have to say no assurance provided, because there's no report. Other than the financial statements, there's nothing for anyone else to see. There's no report. And that's the way, that's the whole reason for the preparation, is that we're trying to keep the accountant from having their name exposed to something where they really have no liability. They shouldn't be exposed because they didn't necessarily do any of the work. This is all client work. The client prepared all the journal entries and did all the accounting and just doesn't want to send a financial statement to a third party and look like a spaz because they don't know how to do a financial statement. So they ask the accountant to do it, and the accountant doesn't want to have to make up a separate engagement and charge a separate fee for it. But if you had assigned your name to a report, then you would have to definitely charge the client. Remember, this is a micro-sized client. This is a mom and pop. So to do the best for them that you could do, just give them an engagement letter. Make them sign the engagement letter. Let them know that you're not doing any audit work, no compilation, no review, that this is just a matter of taking this information that they prepared and sending it off to somebody who asked for it without any report. So this is good. We get to go over what a preparation is, and we see that if a preparation was done this year, but something greater was done last year, we don't have to worry about reissuing last year's report. Great question, number one. Really is. Right? The answer is false. You ready to go to number two? In a report on comparative financial statements, when a continuing accountant reviews financial statements for the current period, so this year's a review, after compiling the prior period, so last year was compilation, the report on the prior period should be issued as the last paragraph of the current period review report. All right, so what you have is an upgrade in service this year, right? Last year was a compilation. This year they bumped it up to a review, and you're doing a comparative, so you have to compare this year's financial statements to last year. And a review report has 4 paragraphs minimum. So this year's report is going to have a minimum of 4 paragraphs. A compilation report from last year might only have 1 paragraph because that's the minimum for a compilation. A standard compilation report only has 1 paragraph. So last year you gave them a 1-paragraph compilation, let's say, and this year you got a 4-paragraph review. How do you indicate what last year was? Because you got to talk about what happened last year since it wasn't the same, wasn't a review and a review. It's a review this year, compilation last year. So if you perform a higher level of service in the current period, the report on the prior period should be updated and issued as the last paragraph of the current period's report. So basically, you get an extra paragraph attached to this year's review report, and that's last year's compilation. The 1 paragraph about what happened last year. You can almost think of it as an other matters paragraph attached to the review report to talk about what happened last year. So you can throw that paragraph on the compilation, which was last year's report, and make it the final paragraph of this year's review report, because you have to let them know about what happened last year if you're doing a comparative. And since it was a different level of service last year, just take last year's compilation paragraph, which is really a 1-paragraph report, and make that the last paragraph of this year's review, and you took care of it. That's all you got to do. All right, so let's go to 3. In the event that accountants have reviewed the prior period statements, but compiled the current period. So now we're going the other direction, right? Yeah, now we downgraded. So we reviewed last year. This year's a compilation. It says the accountant's allowed to issue a compilation report and add a paragraph to the current period report. The added paragraph should describe the responsibility assumed for the prior statements. Because last year we had limited assurance to give. This year was a compilation. We have no assurance to give. You're downgrading, but you got to mention last year, and last year you gave assurance, so that's what you're going to do in the event that the accountants reviewed the prior period but compiled this year. You're allowed to issue a compilation report for this year. The current year's report is compilation, and just add a paragraph to the current period compilation report describing the responsibility assumed for the prior statements. So in number 4, we're going to review last year and compile this year. So it's a step down. The accountant is allowed to issue a compilation report this year and add a paragraph to the current period report, and this description should include the date of last year's report, and that's true. Yeah, anytime you talk about what happened last year in an other matters paragraph or something like that, you should use the date of that report that you're describing. And also a statement that no review procedures in connection with that engagement have been performed since that date, and that is why you need to put the date of that report of last year in this year's report. You want that date in there because you want everybody to know that you haven't done any review procedures. Remember, this is a step down. So you did your review last year, and you did all the review procedures then. But this year, you did a compilation, which means you did no review procedures this year. In fact, you haven't done any since last year's review report date. I almost said audit. But last year was a review, and that was the last review procedure you did, and you haven't done any since last year's review report date. That's why you want to give the date of last year's report in that extra paragraph attached to the compilation report this year.
If you were to reissue the review report from last year, would that
So this is a step down. Reviewed last year, compiled this year. Can you reissue the review report for the prior period? You can.
I would say if you can.
Yeah.
So this is false.
Yeah, this is false. So in the event that you reviewed the prior period but compiled the current period, you may reissue the prior period review report combined with the current period compilation report, or present separately from the current period compilation report. So you could attach the two reports together, assuming you want to reissue them, or you can present them separately. But yes, the prior year review report can be presented again, called reissued. Could be reissued. In the event that the accountants have reviewed the prior period but compiled the current period, if the accountant reissues the prior period review report combined with the current period compilation report, so you're going to reissue, the combined report should state that no review procedures have been performed in connection with the review engagement after the date of the review report, which was last year's engagement, right? So remember, we should mention in the review report that's being reissued, we got to mention that no review procedures have been performed in connection with the review engagement after the date of the review report. The combined report should mention that, because remember, looks like we're combining the two reports and reissuing last year's review report. And if we do that, we're reissuing the prior period combined with the current period, two reports, but issue them together. The combined report should state that no review procedures have been performed in connection with the review engagement after the date of the review report.
So here we are reissuing, but we are saying that
An accountant should not issue a report on comparative financial statements when statements for one or more but not all of the periods presented omits substantially all of the disclosures required by GAAP.
I would say true.
Yeah, it's hard to compare last year to this year side by side. If this year has all the disclosures and last year doesn't have any disclosures, or last year has all the disclosures and this year doesn't have any, that's not really comparable. How do you compare? They're not really the same statements then. If one's missing all the necessary disclosures and the other one has them all. So look what it says again, number 7. Accountants should not issue a report on comparative statements when statements for one or more but not all of the periods presented omit substantially all of the disclosures. So maybe you're doing 3 years, and maybe 2 of the years have all the disclosures, but 1 of the years doesn't. That's still not comparable. You shouldn't be issuing a report on those 3 years combined because they don't all have the disclosure. See, if they were all omitted, that's fine. If they all had the disclosures, that's fine. Then they'd be comparative, but not if some of them have the disclosures and some of them don't. Number 8, during the current engagement to report on comparative financial statements, if a continuing accountant discovers that the client revises the prior year financial statements to conform with GAAP, the accountant's previously issued modification made to disclose the departure from GAAP may no longer be necessary in the prior year's report. So what happened last year? There was a modification. We said maybe a qualified opinion. The client revises the prior year to conform with GAAP. Maybe it didn't conform with GAAP, so we gave them a qualified opinion last year, and now they made a modification in the meantime, and here comes a new year's financial statements, and they fixed last year's. So it says the accountant's previously issued modification made to disclose the departure from GAAP may no longer be necessary in the prior year's report, which means that the fact that you gave a qualified opinion last year, since the client updated the financial statements to make them in conformity with GAAP, maybe you don't need to give a qualified opinion again when you reissue that last year's report. And that's true. You can update your opinion from last year. Yep. Yep. You can add basically an extra paragraph, an other matters paragraph to this year's report. Because remember, this year is fine. It's last year where there was a qualified opinion, let's say. And now this year's fine, so just give an unmodified opinion this year. Add an extra paragraph, other matters, to indicate what happened last year. Just use an other matters paragraph and say that last year we audited, and you don't have to give the qualified opinion. You don't have to show that. That's right. You can just add the paragraph to show that the opinion's been updated. And that's what you do. Usually when you go from bad news to good news, you use an other matters paragraph. Nine, during the current engagement to report on comparative financial statements, if a continuing accountant discovers that the client revises the prior year financial statements to conform with GAAP, the continuing accountant should add an other matters paragraph to a reissued report on the prior period. Yeah, in this question we are reissuing the prior year report. In the previous example, we didn't reissue last year's report, so we added an other matters paragraph to the current report. Now we're reissuing last year's report, and it says the client revised the prior year financial statements to conform with GAAP. Well, we want everybody to know that, And if you just read the prior year's report, it's going to show qualified, isn't it?
Yeah.
So we're going to add another matters paragraph to last year's report, assuming it gets reissued, to show that although it was a qualified opinion when we gave it last year, we can now update that. And if we didn't add this other matters paragraph, all we would see is the qualified opinion from last year on last year's report. Now we can show that last year's qualified opinion no longer matters. We changed it. In an engagement to report on comparative financial statements, if in the current period a continuing accountant discovers a departure from GAAP that affects the report of a prior period. Aha. So here in the current period, we find something that affects last year's report. An accountant may use an other matters paragraph to disclose a departure from GAAP when reissuing the prior period's report. Yeah. If during the current year, the continuing accountant becomes aware of information that affects the accountant's report on the prior period, and the new information causes the accountant to change the report on the prior period, an other matters paragraph is added to the reissued prior period report, along with the current period report. All right, 12. In an engagement to report on comparative financial statements, an other matters paragraph added to a reissued report on the prior period should contain the date of the original report, but not the reason for the change to the original report. Absolutely. It should definitely include the reason. If we're going to bother with another matters paragraph added to a reissued report on the prior period, it should contain the date of the original report and the reason for the change in that other matters paragraph. 13, a successor CPA is engaged to report on comparative statements. This time were issued by a predecessor. So you got a comparative review, but last year was done by someone other than your firm. You're doing this year's, they're doing last year. They did last year's. It says the predecessor is required to reissue their report on the prior period. Do they have to reissue their report on the prior period? No, they're not required to reissue their report on the prior period. In fact, they'd be less willing to do it. There's nothing in it for them, no reason for them to do it. And here's why they don't do it. Because there's a lot of work involved in the predecessors. The predecessor would have a lot of work involved in order to be able to reissue the report. And they may not be willing to do that work. They may not have time to do it. They may not even want to bill you to do it. So they just might choose not to reissue their report. Because it's not like they can just tell you, oh yeah, go ahead and use my report. It should be that easy, right? But it's not. They have a lot of work to do before they can even allow their prior year report to be reissued. There's a lot that they would have to do first. 14, a successor CPA is engaged to report on comparative statements that were reviewed by a predecessor. If the predecessor accountant decides to reissue their report, the predecessor should read the financial statements of the prior period to determine if their prior period report is still appropriate. So here now we're getting into what does the predecessor have to do in order to have their report be reissued, should they choose to allow it. One of the things they have to do is read the financial statements of the prior period, because they haven't looked at those statements in a year. So they got to read them again now to make sure that they're still consistent with the statements they saw last year. How do they know the client didn't make changes to last year's statements? So one of the things the predecessor has to do is compare last year's statements that they reviewed to last year's statements that are going out now to see if any changes were made before you let your predecessor's report, before you allow your report to be reissued. There's things you have to do, and that's one of them. You've got to look at those statements from last year, compare them to the statements that are about to be shown side by side to the current year, and make sure they're the same. as what you looked at last year. That's the only way you would know is if you look at the current presentation of the prior year's financial statements and compare it to the presentation that you looked at a year ago. All right? So staying with the idea that we want to reissue the predecessor's report, but we know that the predecessor has work to do in order for that to happen. 15, a successor CPA is engaged to report on comparative financial statements that were reviewed by a predecessor. So the predecessor did last year's review, you're doing this year's review. If the predecessor accountant decides to reissue their report from last year, the predecessor should read the financial statements of the prior periods, but would not need to read the financial statements of the current periods. False. If the predecessor, yeah, you've got to read this year's also. So I said that the predecessor has a lot of work to do before they can just simply reissue last year's report. So if the predecessor decides to reissue their report, they should read the financial statements of the current period. Why? Why? They didn't do the current period's review. Why do they have to why do they have to read the current period's financial statement? Because there could be something in the current period statements that indicate an error in the previous statements that you are responsible for, since you are the predecessor. So as the predecessor, if you see that, hey, there's no accumulated depreciation here for the current year, well, that might indicate an error last year. So you might go take a look at last year's to make sure that there isn't something wrong with last year. So it's just another opportunity for you to make sure that there wasn't an error in last year's statements. You're reading this year's statements because you're concerned with a possible error in last year's statements. And sometimes it's just additional evidence for you that wasn't available last year, and now it is this year's statements. So you got to read them before you reissue your report from the prior year. Now remember, you don't have to reissue your report from the prior year if you're a predecessor. You could say, no thanks, I don't want to reissue it. But if you want to, you have work to do first. A successor CPA is engaged to report on comparative financial statements that were reviewed by a predecessor. If the predecessor accountant decides to reissue their report, the predecessor should read the financial statements of the prior periods, read the financial statements of the current period. We know they have to do that, right? The predecessor, if they're going to reissue their report, they got to read this year's statements, they got to read last year's statements, but would not need to read the current period review report. They absolutely should. They should read the current period review report because there could be something in the current period review report that indicates an error in last year's statements. So notice, before you allow your predecessor report to go out in the prior year, you've got work to do. You got to read the current year statements, the prior year statements, and even the current year's report.
Right.
17, a successor CPA is engaged to report on comparative financial statements that were reviewed by a predecessor. If the predecessor accountant decides to reissue their report, the predecessor should provide a letter to the successor stating they are not aware of any relevant information that might have a material effect on the current period statements. Yeah, that doesn't seem that would be necessary, because how would the predecessor know about any errors in the current statements when the predecessor didn't do any work on the current statements other than read them? So that wouldn't help. But I'll tell you what is backwards about this. There is some truth to this, but it's in reverse. A successor is engaged to report on the comparative statements, we said, that were reviewed by a predecessor. If the predecessor decides to reissue the report, It's the successor that should provide a letter to the predecessor stating that the successor is not aware of any relevant information that might have a material effect on the prior period statements. So this letter has to come from the successor who's got some updated information about the company now since last year, and it's there to provide some comfort to the predecessor and say, hey, we didn't find anything in our work this year that would impact on last year's statements. It's like a rep letter. It's like a rep letter. So the successor gives representations back to the predecessor saying, hey, we did a whole year's work this year on the review, and we didn't find anything that would impact your report from last year or the statements from last year. That's required. So we said a lot is required before the predecessor can just reissue last year's report. A lot of times they don't. Right, exactly. They'd have to be getting paid a lot for that. 18. A successor is engaged to report on comparative statements that were reviewed by a predecessor. If a predecessor is asked to reissue their prior period report, the predecessor should generally read the new statements, read the current year report, and we said obtain a rep letter from the successor. But the rep letter would not be required if the prior year engagement was a compilation. So instead of review, what if it was compilation last year, review this year? Would you then need a rep letter? Yeah, whenever the predecessor is asked to reissue their prior report, doesn't matter whether it was an audit then, a review then, or a compilation last year, they should read the new statements and obtain a rep letter from the successor stating that the successor didn't find anything that would impact last year. Now, we know that in a compilation, you don't need to get a rep letter from management, right? That's a rep letter from management. Right, there's no inquiries. Good. But you still want a rep letter from the successor before you issue your prior year's, before you reissue your prior year's compilation. You want a rep letter from the successor CPA firm that they didn't find any evidence of anything wrong with the year that you took care of.